time in its legacy social media business. So there's some wrenching changes. In the meantime, if you believe Wall Street analysts, earnings per share this year are going to decline by 40%, and the stock is trading at about 18 times earnings. So even given the fact that it's still the weakest among the FANGs, I don't know if it's an opportunity yet to go bargain hunting in this name.
Dan, how do you think about the multiple at this point? Is there anything in the multiple for the metaverse, for instance, or is that sort of just a call option, so to speak, on something that could materialize in the future? But you don't need that part of the picture to materialize in order for it to be at an 18 multiple, or however you view that multiple right now.
I think the metaverse is really an option. I don't think much of it's embedded in the price. The company is in transition. And so my focus is the innovation and the growth. And while Instagram is healthy, core Facebook is quite mature. And so Facebook needs to do more to appeal to users in their teens and 20s and really pivot the organization as the paradigm shifts to more short-form video. So we obviously see success with TikTok. And so what we're looking for is whether this company can shift the business and become even more relevant to users and advertisers in order to grow. Our preference in this space is on Google, where we like the durability of search. YouTube has good growth prospects, and we think there's significant opportunity in the Google Cloud platform.
So Dan, in your view, the lackluster performance of the stock relative to peers is an indictment on a declining core business and just the challenges the main business faces, as opposed to its gamble and spending on a part of the business that may never materialize?
The challenge the stock faces is really driven by this tougher growth outlook and the inability to generate the same levels of free cash flow, given how much they have to invest to pivot the company. And so Mark Zuckerberg and the leadership team clearly have a very strong track record. But given the shifts in the industry, they're going to have to invest even more. In terms of the metaverse opportunity, we'll have to see how they do. And part of it, I think, is going to reflect perhaps a new business model. You need different strengths, different DNA, if you like, to sell devices rather than just services. So that's something we're watching very closely.
It sounds like maybe we should be re-rating, or investors should think about re-rating the stock, or has it gone through that re-rating, Paul, lower, with a decline of about 50% so far this year?
Well, because it still has a relatively high multiple, what I need to see first is, after we get through this trough in the business, and of course part of it is macroeconomic related with the recession and its impact on digital advertising, what will be the growth rate on the other side? Right now, analysts are expecting about a 9 to 10% comeback in earnings per share in the out year, but that is really dicey and speculative. And so tell me what the growth rate is going to be on the other side, and then perhaps I can put some pen to paper and do some re-rating math. But right now, the problem is it'll continue to be under pressure because we just don't know.
The 9 to 10% growth in the out year being 23, Paul?
Yes, that's correct. This year, if you believe Wall Street analysts, EPS could drop as much as 40%. And we probably will not have a year-to-year quarterly gain in earnings per share until 3 to 4 quarters from now.
Right. So how do you think about the stock, Dan? I mean, Paul had said he doesn't have enough information right now to figure out what multiple it should have. So how do you think about it? I mean, I know that you say you prefer Google, but at what point do you think this could be attractive, or are there just too many warts on this one for you even to look at right now?
My focus is on the innovation and seeing whether Reels and the other initiatives around commerce, as one example, can help reaccelerate the growth. I think what will matter most for the stock is whether they can show signs of reigniting the top line. If they're able to do that over the next 18 months, I think the stock market will reward the company. But the biggest single thing right now, and certainly there's a recession, which all companies are facing, is really the innovation engine and ensuring that besides the men and women inside Facebook or Meta, they're really continuing to attract developers and strengthen their ecosystem in what is, of course, a challenging period. That, in my view, will matter more than earnings per share. If we see it manifest itself in better growth over the next 18 months, the stock has the potential to move higher from current levels, but it'll take some time.
All right. Paul and Dan, thank you so much. Appreciate it.
Thank you.
Thank you.